The best indicator for spotting breakouts is the price channel indicator, and I'm going to show you how to set it up and use it right now. The price channel indicator is comprised of a top line and a bottom line. The top line tracks the highest prices of the chart, and the bottom line tracks the lowest prices, forming a channel-like figure. To set up the price channel, go to your indicators and type in price channel. On TradingView, it'll show multiple options. I'll just click this one, and it loads the one that I want. You can also do this on Thinkorswim, and I believe other platforms have different variations of this indicator. I'm going to remove this middle line because I don't find it very helpful. Otherwise, I leave all the settings on default. Now that we have it set up, let's talk about how to use this indicator. The biggest advantage to this indicator is being able to see clearly when the price has broken out of consolidation area. Let's take a look at a few examples to see exactly what I mean. Take a look at the middle of my screen here. Here we have clearly an area of consolidation on the SPY chart. This is also shown by the price channel. I'll extend the line here to make it more clear. This is the top line, and here we have the bottom line. The stock bounces around in between these lines, creating a consolidation. The stock breaks out of this area with this bar right here. When it does that, it continues higher. See how easy the price channel makes this for us to see. It provides this line here, which is the top area of the consolidation. As soon as I see the stock has broken through that line, I know that most likely it's going to go higher, and I can set myself to get into a position. Let's take a look at another example. Here in our screen, we have a tight area of consolidation. The price channel draws a line on the top area of the consolidation. Then the stock breaks out with this green bar here. After it does that, it proceeds to go higher. When I see this green bar breaking above the top line of the consolidation, this is a pretty good bar for me to get in on. And if I did that, I would have had a good win on this trade. Here's a third example. We have here the stock pulling up and then pulling back and then pulling up again to meet the first area of the consolidation. The price channel draws this top line here to indicate that. Then we clearly see this green bar breaking above that area. If I had gotten in on this bar, which would have been a smart move, I would have had a really good trade. We see the same principle applied to the downside. Here we have an example of the stock pulling back a little bit, pulling up again, so we have this area of pretty sideways trading, in other words, consolidation. Then the stock puts in this big red bar, breaking below this bottom line that the price channel indicated for us. If I had gotten in on this red bar, I would have had a good trade because the stock proceeded lower. Here's another example on the downside. Here we see clearly sideways trading indicated by horizontal lines with the price channel indicator. The stock is bouncing up and down between the channel. Then it puts in this red bar which breaks below the bottom line of the channel. This indicates to me that it's breaking below support and I should get in here. And if I had, I would have had a really good trade. So now we've seen how the price channel can show you when the stock is breaking out of an area of consolidation. An additional advantage of the price channel is it shows you the next level of either support or resistance, which can indicate to you your next target. Let me show you what I mean by this. So here we have an example of the price trading sideways in a consolidation. Then we see the stock breaking above this area of consolidation, and I could have gotten in here to go long. Then the question would be, what is my target? In other words, when do I get out of the trade? The price channel makes it very easy to see what the next level of resistance is. In this case, it would be this area right here. So all I would have to do is look to the left to see the next level. And that's exactly where I would get out. The same principle applies on the downside. Here we have a large area of sideways trading, in other words, consolidation. Then the stock breaks below the area of support with this red bar. If I had gotten in here, I would look to the left to see my target. The next major area of support is this line right here. I'll extend the line now. And that is exactly where the stock began to consolidate. So this would be my target area to get out of the trade. Let's take a look at one more example. Here we have an area of consolidation where the stock is trading sideways. It then proceeds to break above this area with these green bars. If you wanted to get in here, you would set your next target here, which was in the past the last area of resistance. And indeed, that is where the stock began to consolidate again. One important thing to note about this indicator is that the stock can make different patterns of breakouts when leaving an area of consolidation that you should be mindful of. First, let's take a look at this example here. The stock traded sideways, up and down in this channel, and then finally broke out in this area here and proceeded to go higher. However, before it went higher, it made a pullback. Why did it make a pullback? Well, because the uptrend started from this bottom green bar. So by the time the stock got to the area of resistance, it wanted to pull back and rest before going higher. Now, contrast that with this example where the stock traded sideways prior to having this gap up green bar, which led the stock to shoot up higher. When the stock does not start from all the way in the bottom, but rather rests or consolidates right before breaking up above the area resistance, it typically will not form a pullback before going higher. Let's see a few more examples. Here we have a pattern of the second type where the stock, instead of starting from the bottom of the consolidation, has a tight sideways consolidation and then puts in one gap up green bar. Here you see the stock did not make a pullback because it was already resting prior to breaking above the area of resistance, and so it just shot up higher. Contrast that again with something like this, where the stock trades sideways up and down, and then comes all the way from this bottom green bar, rises all the way to the top of the consolidation, breaks above the consolidation, and remember, because it started all the way from down here, and it has already been 1, 2, 3, 4, 5, 6 green bars up, it's going to want to rest before proceeding up higher. And indeed, we see it makes this red bar as a pullback before going higher. So make sure you understand the pattern that the stock is making when it breaks out of the channel before you take a position.
If you like this video, please like, share, and subscribe. See you next time.